My name is Dinakar. I was earlier in Bosch for a long time, and after that, I've been doing leadership on demand, is what I call my service as, to really help companies improve their performance, and have been working with multiple companies from micro to multinational companies in the last 10 years, mainly in the manufacturing space. And I've taken the responsibility of organizing the SID Chat, a platform for seniors in our group to share their wisdom to the startup aspirants. And today our topic is about the preparation of a very powerful pitch deck, which is, I think, quite a challenge to many startup guys. And to talk about this topic, I invited two experts, Mr. Girish Patra and Mr. Sudhakar, both with mentoring and financial advisory investor background, and that is their portfolios. I would now ask them to start introducing themselves. First, you can introduce yourself, and after that, speak about your wisdom on preparing a powerful pitch deck. And maybe each one of you can take about 5 to 10 minutes, and then we will open the floor for discussion. In the meantime, others also will join in. I will just start with Mr. Girish Patra alphabetically. So please go on, Mr. Girish Patra.
Yeah, sure. So first of all, thanks Dinakar and Mr. Manoj for giving me this opportunity. It's really an honor. I was a corporate oncho, worked in a SME for almost 8.5 years, and for the last 5 years in the startup world. 2.5 years of struggle to learn the tricks of the trade, and around 2 years of value adding in a gainful way, if I may use the word. And I gave my TED talk also on startups, and I've committed the rest of my life, whatever is, to the startup world. Of course, with the vision that I see the largest number of unicorns or even trillion-dollar valuation companies being born from this land, because that hunger is far, far more in an Indian youngster to create world-beating solutions, products. Yeah, the opportunity is keeping on exponentially growing for these youngsters. So therefore, in fact, I released a poster also saying wanted ChatGPT startups, and we'll give them funding up to 1 crore, 8 crore kind of. So ChatGPT is 6 months old, and if startups in India are also talking, maybe 100 startups already got funded in the US, but in India, people have started talking. So it's fine. We are slightly slow, slightly behind, but we are catching up and we are moving faster. So that's my comment about the startup world. And about my company, Sarthi, in 2 simple lines, we make startups fundable through our programs, and we fund investable startups. So and we are the rare strategists in the startup world. We bring strategy to the startup world, and our frameworks are our heroes more than us or our mentors or our investors. The frameworks are our heroes, which we apply, and based on which we find out whether the startups are fundable. And if not fundable, we give them gaps. So we empathize with everyone, that even if you are working hard, you've not got funding, if you kind of enroll with Sarthi, you know what 2, 3, 4 critical areas you need to work on to kind of correct, and then the probability of success of investment really goes up. Yeah, funding winter, funding summer will come. But if you are building a sustainable business, which is on the path of being a sustainable unicorn, then funding is one element which will accelerate your success. That's our philosophy. So if your survival is at stake with funding, then today that funding is really tough for startups who are finding it tough to survive because they're not able to raise the next round. Yeah, it's become 10 times tougher than it was, say, 9 months back. So that's the reality. I like Dinakar to introduce, and then we can debate about what to put in your pitch deck, what not to put. Yeah. So over to you, Dinakar. Sorry, Sudhakar.
Sudhakar, yeah, please go.
Hi, everyone. So ideally, we look at slightly grown corporates. We work with startups which are slightly grown. My takeaway with corporates, what we have worked across, is that like we see people are more interested in taking money, but then money, whatever we take, has to be accountable. There has to be a responsibility in terms of what we are going to do with the money. Now we see a lot of startups coming up with an unicorn status. Then once the funding stops, then I think the funnel also gets drained for this. So coming back to the point, what is the problem that we are going to solve as a startup, and what kind of money is essentially required in terms of running the show? I think whatever money we take it from the public has to be very clear, because money is accountable in terms of what we do. And most important aspect, personally, what I feel is our business model sustainable for a longer term, and how we are going to create solutions which is going to solve real world problems. As he rightly said, like what Mr. Grish spoke about, ChatGPT, if you look at, it's a wonderful tool. People are all trying to use it for a betterment of what they can achieve out of it. And I think that's the global vision kind of product startups should look at. Now, let's. My background is like I'm a banker. I started with ICICI Bank, the corporate banking space. I've been with a lot of corporate funding aspects. Then with exchange, I was part of National Stock Exchange, where I was working very closely with a lot of SMEs and other corporates which are getting into the SME space. Now, startups, after a period of 2-3 years, they try to move themselves into the SME space. Now, there are opportunities for startups to look at the listing space also. Now, all these things have to be done over a phased manner, provided you sustain for a period of 5 years. I will park my discussions here. Let Mr. Girish start up with the discussion, Q&A and other things, where we will make it as more lively in terms of ask questions and other things. Then we will see to conclude as to what we can sum up in terms of what exactly a powerful presentation will be.
Yeah, so I think what we could do is in very what should I say, nice way. Mr. Sharad Heda, I don't know whether you heard of him. He had shared a LinkedIn post with me telling that you could use this to open up today's discussion, which is nice of him. Thanks a lot, Sharad, once again. On the here, he said, what should a startup pitch contain? And here he has made multiple, it was a LinkedIn post. I'll also share this in our WhatsApp group. And here there are multiple topics. And on the right side, there are basically which particular investment company or the investment agency would look for what kind of information. So I would like to open this as a picture. And if you are interested, you could use this as a what should I say, kind of a guide for our discussion. Otherwise, you are most welcome to start with your own wisdom, Girish, please.
Yeah, sure. So you can remove this slide. Yeah.
Okay.
You can put it later.
Okay, sure.
So what I want to say is broken into two parts. Yeah. So the topic is how to prepare a powerful pitch deck. But I've gone through pitch decks which were made by spending good amount of money using experts to make it, but they were on weak business fundamentals, right? And a seasoned person in the investment world who's seen maybe 50, 100 pitches can see through it. So what an investor is looking for is not a powerful pitch deck. He's looking for a powerful business to invest in, right? So what is a powerful business? And that's what we kind of evaluate. It starts with the problem, as Sudhakar mentioned. Are you solving an unsolved problem, and how big is that problem? So when COVID struck us, making the vaccine was the biggest problem this world faced. And any company like who was making vaccines, so we got this RNA vaccine company who raised funding from the government, $1 billion funding from the government just to make the vaccine, because it was that tough a problem to solve and a problem which wanted a solution quickly. So what problem are you solving? Is it an unsolved problem? And do people want a solution for it as desperately as they wanted the COVID vaccine? Yeah. So that's the first check. And Sudhakar also mentioned that. So I'm just giving you 3, 4, 5 pointers on how to build a powerful business. And then we can come to the powerful pitch deck. Because as I said, we've seen enough pitches which are very good presenters, very lovely, colorful slides, but on a weak business fundamentals. And seasoned investor or people, even a 3-year-old analyst in a VC firm can see through such pitches. They are interested in, are you building a powerful business, right? And so what the word which we use is, do you have a strong value proposition, which is solving an unsolved problem? That's the check we do when we speak to entrepreneurs. And stage is less relevant according to the stage, because if you are struggling for 3 years, 4 years, you are struggling. If you are burning 10 lakhs to get 2 lakhs of revenue, then also you are struggling. So what if you got $1 million funded? So all these are questions. At times, people have been lucky and they've raised big money on the backing of their past exits or their know-how in the investment ecosystem. But then they were not able to build sustainable unicorns. And today, in the funding winter, the investment world wants sustainable unicorns. The soft banks and all who used to fund loss-making, hyper-growth startups are not there today. Those investors have kind of revalidated where they want to fund or whom they want to fund. So therefore, the chain is broken. So no $100 million checks for loss-making startups is a reality of today's world, and it's going to stay for long. The funding minister is already, I think, 8-9 months old, and it's going to be a few years old, maybe. So that's the reality. So what happens when you have a clear and compelling value proposition? See, you have a clear positioning, you can price better, you have greater competitiveness versus who else is there in the market, and you have efficient and focused marketing. You know where to spend your monies on. So when an early stage startup tells us I'm focusing on B2C and B2B both kind of thing, it's a dampener. That was in an early stage, you have limited marketing monies. How can you expend it with a diverse TGs? And then it's easier customer acquisition. So if you're solving unsolved problem, you're giving a vaccine to people who are desperately looking for vaccines. So you'll have easier customer acquisition. People will stand in a queue also to take your solution. And of course, more effective business models. You'll be able to make money. All the vaccine makers today are buying and investing into startups because they made tons of money making vaccines for us because we needed them desperately. So you'll have effective business models and a better business with a convincing pitch. So the pitch comes on top of a convincing business or a effective business. So I'll cover the pitch part next. Happy to give the mic to Sudhakar.
Yeah, Sudhakar, please go on.
Okay. Yeah. So now I come across scenarios where startup promoters come to us. They say that they have prepared a pitch deck. Now they are looking out for 1 million or 500,000 sort of. But we usually ask the founders a simple question that have you created a product? Now, a product has to be created with your own penny, what you have. Now, what founders, investors look in is for what is your skin in the game concept? Now, have you put your own money into the business? Now, that applies even for the debt side of the business also. You go to a bank, you ask for a loan. Now, bankers will say, what is your skin in the game? What kind of money are you putting into the business? Now, bankers also expect at least 20% of money to be put in for them to look at giving 80% of the loan. Now, similar scenario do apply for equity also. Now, what is your skin in the game? And then the next scenario would be, who are the people who are going to trust you and put money? Obviously, it is going to be your close friend circle or your relatives who trust you. Now, after that is what ideally I prefer. Once you scale up, then I believe like you can look at the external world funding, because if you're going to look at funding without even establishing proof of the concept with just a pitch deck, I think then that kind of scenario is not going to give you a very positive outlook. So that's the take that we typically look in terms of taking any startups or corporates, even to look at other source of funding. So that's our take, our knowledge that we have gained over the period of time. So ideal point is use your skin in the game, try to build a sustainable model with what little resources available. Prove that you are capable of delivering research, and for expansions or for further growth is what you're looking at money. So your the takeaway is the money that you ask ideally is for further growth and expansion where you have already proven yourself as a product. Now that's the take that we would like to market to all the time.
Yeah, thanks a lot. Thank you so very much, Sudhakar and Girish. Before we open up for discussion, I have a question. There are quite a few startups whom I have spoken to who have, there is no real innovation there, but then they're meeting a need. And at some point of time, they get stuck and they would need working capital, basically to run the business. Okay, and they're also profitable. So in such cases, would you recommend to go in for equity like what you are dealing with, or would it be more advisable to go in for a debt fund in the case of bank? In that case, there is no point in preparing a pitch deck for such companies. And once that is dealt with, then we'll open the floor for questions. Please go on.
See, my take, if you look in this, like equity is pretty costly. Equity comes with a lot of responsibility. So ideal scenario would be like any product or a process kind of businesses where you are capable of raising debt. Your first point of contact has to be always debt, because people always think that equity is cheap and equity is free. That is not the scenario. Equity is pretty costly because the return expected from investors, typical investors, is not less than between 2x to 5x, right? So that way you have
In
to
how
be
many
very,
years?
very cautious. Angels typically look somewhere between 3 to 5. Early VCs also look that kind of return. PEs look somewhere around, the larger PEs, someone who is deploying 100 crores and above with your businesses, looking for 7 to 9 years.
Okay.
So angels are very short. They're looking for 1 to 3 years of exit. VCs looking for 3 to 5 years of exit, and PEs look somewhere around 7 to 9 years.
Okay. Thank you so much. Girish, would you like to add any thoughts on that?
Yeah, so see, the mindset in India till say around 10 years back was to build SME style, slow businesses, reach a few crore. If you reach 100 crore, you are lucky. But then you get eaten away. So the American comes with big dollars in his pocket and says, I can buy you out. You build a business for 5 years and you may have a few crores in your bank. But what did you create? So why can't the reverse happen of we creating hyper growth, world-beating solutions, and then buying out the Americans or the Europeans or the other? And that's the opportunity which India has today. And that hyper growth money is available with VCs. It's risk capital. They know they are taking a risk. But if you can convince them that I'm a world-beating solution, then it's good to have them in the boat and do something large.
Okay, super. Thank you. Now, who would like to have any questions? Sagar, whoever who has a question, please raise the hand, and it becomes a little more, what should I say, organized discussion. So, Sagar, please go ahead. You can ask your question, and then whoever wants to ask a question, please do that, because asking a question also gets you visibility, because you get to introduce yourself, then you get to directly talk to Mr. Girish and Mr. Sudhakar, with whom you can, of course, touch base later, but then now you have got a direct contact, which also helps you in your business. Sagar, please go on.
Okay. Hi, both of you, Girish and Sudhakar. Good evening. My name is Sagar, and I have got two startups. One is into sustainable architecture, and my partner, you can see the architect Supriya. And the other one is I'm into recruitment for executives in manufacturing sector. Now, my question is in two stages. One is, what is that one big difference when we are having a pitch deck being presented to the Indian investors versus non-Indian foreign investors? How will they perceive, and how, as I, a pitching guy, should be looking at it? Is there any major difference? Second one is, when we are doing a pitch deck, how strong uh, innovator or an inventor or the technical guy along with a sales guy important?
Yeah, please go on, Girish or Sudhakar, whoever wants to take the question.
Yeah, so my take is in India, 80% of the VCs are foreign VCs because they have dollars. They've raised money from LPs abroad and they are investing into India. So I have not seen any difference pitching to, in fact, an Indian would be doing more, what should I say, real life. The foreign VCs are bigger risk takers, even at a less MRR or less proof or less validation, they are ready to cut slightly larger checks. And that's why we've seen fast commerce and all this born, right? And people are questioning then fast commerce after 2 years saying, who's making money in this business, right? So they are more riskier capital providers than Indian VC, so to say. That's my first take. And the more technical a space, the more there will be a domain expert or an industry expert who will evaluate that at a national or at a global level, because they won't invest unless they understand that domain in and out. Because at times, even VCs or investors know more about the domain than even the founders themselves. That's their depth of research in any domain, is my second take. Yeah.
Sudhakar, would you like to add anything?
Yeah, correct.
Please go ahead.
The first point, what Mr. Girish
Sagar.
spoke about is exactly true. Like the global VCs are more risk takers. Although the global VCs come as LPs into the Indian VCs and other things, still the operating partners are all Indian. So Indian mindset is typically want to see proof of the pudding and then slowly inject capital into it. The second thing is like anyone who is looking at investing within India's kind of scenario, they bring in experts to analyze your businesses. They engage specialists. Assume like you are into a recruitment kind of business. You spoke about recruitment, right? They would typically bring in experts on the recruitment industry. Typically, someone who was the founder of Naukri or something sort of, would part of the board in terms of evaluating your HR opportunity and what kind of growth the business is going to have. Now, all those things will be discussed before they commit any money into your business. So point is, they don't simply put money, they analyze a 360 degree of your businesses before taking a conscious call. Now, ESG also plays an important factor in terms of what your business is going to give to the society. Now, that is also a lot of LPs and investors are looking at, global investors, as to what is the ESG score of your business. Now, that parameter also plays an important role in terms of deciding what money can be pumped into your business.
Thank you so much, Sudhakarji. Now, Hamsavardhan, would you like to go on with your question, please? Please introduce
Yes, thank
yourself
you.
and then,
Yeah. My startup is in a funny space because we have literally developed a disruptive technology with some inventiveness. We have patents filed, but it's in the construction field. We have actually developed a construction technology itself, prefab technology, along with a digital platform which can be used for designing and all that. What I'm finding a pushback from most of the VC that I have approached, not that I have met many people, but the few I have met, the moment I mention I need a manufacturing facility, they just literally throw me out of their offices. So this is a little confusing for me because a world without factories will look like a stone age. That is one. Secondly, where you mentioned those, why is that such an aversion towards if there is some kind of manufacturing involved, even though the it's only 1/3 of the money that I'm asking that will go into the manufacturing setup. Second is when you mentioned debt. I've approached banks. Everybody wants to see your 3 years revenue, IT filed, return filed, as well as collateral. I mean, that doesn't sound like a startup space. So how would you advise me on these two things, please?
Okay, just to answer your question, there is an IIT Chennai, IIT Madras incubated company which is into fabrications of houses and other things. They have come up with a 3D model housing and
Module X.
Module X, right?
Yes.
Now these guys are incubated by IIT Madras.
True.
Right? I think you have to look at the right VC which is suiting your requirement and their requirement. Now, you have to look at the mandate of the VC. Now, there might be a VC which is looking at branch, typically FMCG branch. And if you go and pitch with them, maybe they will not say no. But the thing is like you will get a different kind of expectations. So look out for it. And the other thing is also that you might scout with, you need to do your homework before you go and approach any VC. Look out for all the VCs which are present in the Indian market and look out for them whether they have a mandate to look at any kind of technological construction sort of, which is clubbing all those things, and then start shooting your proposal. Because shooting in the dark might not give you results. Look at an approach which will work very closely with what you exactly want. So you can also, the other best way is to get yourself attached to any of the incubators. Maybe this incubators also support will also help you in terms of getting more visibility of your product. Now, IIT Madras or other IIT, typically IIT Chennai incubation is pretty active in terms of bringing a lot of startup, branding because of their attachment with the incubation sector. Now, a lot of people have, the angels and other people have funded VCs, startups which are in that domain where they are incubated in IITs or IIScs. Look at that kind of opportunity because I think it's a tough game. Money ask is going to not stop, but you have to reach almost 100 people to get yourself money from
Okay.
investors.
I have just started, so I think I have a long way to go. Thank you.
Yeah, Girish, would you like to add anything to what Sudhakar said?
No, Hamsa, you were pre-revenue or you got some revenues?
No, we have got early traction. We have 4 orders worth around 4 crores.
Okay.
And but we don't have we are just doing jugaad because to serve those customers, because we don't have the manufacturing facility to give the actual technology that we have developed. So this is like a catch-22 situation. I can't go to market because I don't have the factory, and people are asking me for proof of concept and all that, which I can't show unless I have the manufacturing. So I'm a little bit in a bind as to what I should do.
So Sudhakar mentioned the skin in the game. So a VC is interested in seeing what is your skin in the game before he puts his little skin in the game. So if you are able to set up a small factory, get to a certain turnover, because slow scale startups attract investor money later in the life cycle instead of early. If you are a tech startup which can show hyper growth, then you will be able to attract investor money earlier. But otherwise, your first journey with the 0 to 1 would be maybe a 5 crore top line, which you'll have to do with your own money or debt or some other source. 5 crore to later, the sweet spot is that 5 to 50 crore, where the buyouts happen, all those happen in that 5 to 50 crore. There are even startups who are building a brand of brands where they are buying other brands in the space. But you have to reach that initial turnover yourself, is my take. Yeah.
Sure.
Yeah,
thank you very much.
Harshvardhan, whatever you asked in terms of manufacturing, maybe we can touch base offline.
Yes, sir.
And see in what way I can be of any help, in terms of setting up that.
Yes, please. I'll reach out to you. Thank you.
Sure. Now, Mr. Neeraj Harlalka, please introduce yourself and then your question, please.
Yeah.
Over to you, Mr. Neeraj Harlalka.
Yeah. Am I audible? Yeah.
Yeah, very much. Yeah.
Okay. So hi, I'm Neeraj Harlalka from EduBerence. EduBerence is an online career assistance platform where we are trying to cater to the Bharat students from grade 7 to 12 so that they can take their own career decisions. So currently it's being done, but without technology. We want to reach out to a large number of students using technology and latest innovative methods. My question to Sudhakar and Girish, and thank you, Dinakar, for this opportunity, is that we are actually working in a space which is really large. So there is bound to have competition, but we are trying to create something very unique in terms of the technology and the IP which we are building. So how do we position ourselves where, if we want to specifically go into the tech domain and talk about it more on a pitch deck, sometimes we feel we need to do a lot of talking around the sector as well, because we're not very sure every time that the investors are well aware of the kind of sector we're talking to, although we would like to filter out investors who understand that space. So when we are working in a very niche kind of an innovative space, what is the kind of any recommendations so that we can get the point across to investors? Yeah, thank you.
Yeah, please go on, Girish. You can start and then Sudhakar can join.
Yeah, so my take is that EdTech is in fact hyper competitive. Investors funded weak business models and value propositions, and which after a few rounds they realize that it's not scaling or it's not big enough for so much competition. So a tech startup will be evaluated by at least 3-4 rounds or 3-4 levels before he gets that traction. Of course, Bharat was in vogue. I believe it is still in vogue, although the Bharat's buying power is under question. That how much can Bharat spend for innovative solutions is that question mark which all investors have. That the cities, it's easier to look at the size of the market and the buying power, but as you go towards Bharat, the buying power becomes weak. So that earlier proof and that earlier traction, which I mentioned earlier also, is required. You'll have to have that earlier proof and traction with a differentiated value proposition and a running business model.
Yeah. So, Sudhakar, would you like to add on?
Yeah, my take is also similar to what you have spoken. EdTech as a business is already overcrowded with a lot of investors burning their fingers. The biggest problem is like all the investors have not made money out of EdTech, right? So that's the issue. Now, although you might speak about USP and other things, The proof of the pudding is in terms of what you deliver for investors to look at your business model and invest their money to make return. Now that is where it is very a model which has already got a lot of investments, have not seen any returns for investors. Now you are also in the same domain, although your model might be USP, but you should have started it from 5 years before. But now the point is you have to start scaling up. There are two things that you can do. One, either you scale up on the top line or you show deliverable profit along with your the USPs that you.
Thank you so much, Sudhakarji. LK, go on.
Hello, everybody. Thank you.
Please introduce yourself and then you can ask
Hello.
your question. Yeah, please
Yeah.
go on, LK. Introduce yourself and ask your question.
Yeah, myself, Lakshmikant Bakre, LK from Pune. Sudhakar and Girish, very good, very nice session, wonderful session. Thanks for all the knowledge. One question for you before that, Sudhakar, sorry, Dinakara, the person who asked the question earlier, for him, just a connect from my side, maybe potential connect. So in fact, today I was with one of the EdTech founder who got exit. His company, We Shine or some name, they do all the exam automations and all that and work with universities across India. So large company, 10 years working and got recently last year acquired by Constellation Group. So it was a good acquisition, big acquisition. And the investor is coming out now after serving 1 year committed period. He is looking for better opportunities now. It was my first meet through my friend. So if this earlier person who asked the question into EdTech, if he can share something with me, probably I can arrange his connect with this guy and they can take it forward if they find synergies in between. That was the first point. The question is coming from this discussion. That which I had in the afternoon. So for Girish and Sudhakar, please enlighten us, all of us, on the question which is asked by the early stage investors, like angel investors, but giving some sizable amount. They are asking for a board seat. So how does the board seat matters to the founders, to the investors, and whether this decision should be taken or not taken? What are the pros and cons?
Correct. Now, if you look at two unicorns which are in India, one is the large unicorn, which has not raised any money from investors, which is doHow, and the other one is Zerodha. Right. Now, both these players, see, you have to take a conscious call in terms of what you want to do in terms of raising money. So, my start of the discussion, what I spoke about is responsible usage of money. Now, if you look at Zerodha or what do you call doHow, both players have not taken money, although they might also had similar kind of issues, similar to what other startup founders had. But they were more in terms of using their internal resources to scale up the business. So the point here is how fast you scale up your businesses so that you start making profit early on, which can be pumped in for further expansion. Now, they also were very tech savvy in terms of using technical products for expanding their businesses. Now, coming back to the question of investors. Now, angels, so when your business is very small, you approach an angel. Now, angels look out for a larger chunk of equity for a smaller money that they will deploy. Now, it can go up to even 40%, 20 to 40%. It depends on which kind of angel, what is the negotiations you do. Then VCs slightly lesser compared to angels. Then once you scale up is what PEs will come into picture, where the allocations might be lesser, but the money raised is higher. Now, if you want to go to a PE at the start, it is not possible. Now you have to live with what is available at the initial stage, which is typically the angels, right? So it is always risky that angels might always look at a higher allocation of equity, because the risk taken on your businesses is also equally higher when an angel comes in. So the risk reward pattern is what typically goes in, and it's a call that promoter, the startup founder, and the respective angel who's taking a risk in terms of deploying the money takes. It's an individual call, right? So now I've spoken about three aspects. It is your call in terms of what is better for you, and at what level you want to raise money is the call you need to take.
Yeah.
Thank you very much.
Yeah, Girish, would you like to add on with your wisdom?
Yeah, so my take is for a startup to look for anything sub 2 crores in today's environment is rather work with customers and generate that cash on tide over this. A startup should look for significant funds, be it angels also cut that kind of checks, but they should not go for sub 1 crore kind of fundraisers, come what may, because there's more, the return on effort is low. If you have the wrong person who might want a board seat, he might want so many other clauses in the agreement. So the effort to return is not worth it, as I see it, for small ticket sizes. Yeah, if the person brings in more value add besides money, then it's worthwhile giving him a board seat, because 1 + 1 can become greater than 2. So that's what the founder has to evaluate. That is that 1 + 1 greater than 2. Is that individual's time valuable for me?
Thank you so much, Girish ji.
Thank
Supriya,
you.
please go on.
Yeah, architect Supriya from Creatrix Design Studio. Our mission is towards sustainable design and materials. So my question is, mainly in the construction industry, how strong is investors bullish in sustainability sectors?
You know, look at any segment. I think if you are really solving the world problem, investors are really bullish. Now, let's not look at any sector specific, because everyone was using Google as a tool in terms of searching data or searching information. Now the ChatGPT came in. No, ChatGPT gives you one conclusion in terms of how data can be analyzed and output can be given. Now that's that's also a very larger problem in terms of going to each website, searching for your keywords and trying to pull data and collate it on your own. So now this problem is not an individual problem. Everywhere people used to do the same. A global problem solved by AI tools and other things now. So coming back to your question, in terms of construction as an industry, now is it really solving any bigger issue? Now let's not look at the India specific model or any model. If it is going to solve a bigger issue, people across globe are willing to use your product. And I think then once people start using your product, then I think investors will obviously look at it in a very, very positive way. So that's our take.
Girish, would you like to add anything to that?
Yeah, so sustainability is more and more becoming a must-have instead of a good to have. In like ESG, be it listed companies, if you are in the Fortune 500 also, if your ESG scores are below a certain point, then some of the investors, PEs, don't want to invest into such companies. So it is coming in vogue. At the same time, it's that doubt in the real value of sustainability, or is it just a show? Is it just a show? So that's the question which at times perplexes investors, and they burn their fingers also going after show. So there were startups who raised funding who were on the ESG reporting bit. But then more and more you scrape the surface and you realize that the reporting was all just made for the balance sheet or made for that. So it's going to take time for the sustainability space to mature. Of course, it's a need of the hour, but it's going to take time. And that's what premium you'll pay for it is the big question mark, which a VC would surely ask the founders also and themselves also.
See, I have a question to both of you. You said that there are basically three main drivers, right? One is the need has to be very powerful, or the pain has to be
problem or need or pain, whatever.
needs to be there. It should be very acute.
Hmm.
And the urgency of the need also should be very high.
True.
And the next is that you have an effective solution for that particular need. And but the bonus would be to have a MVP already there. So that
Action. Yes.
this would be
Proof.
the base for preparing a pitch deck.
Perfect.
Now, if you look at the manufacturing sector, when you are talking about any product development, typically these time zones would run into years, at least a year or two would be the time zone for each of these phases. Whereas if you look at a technology product, then it could be in terms of quarters or maybe in terms of months also. Now, in that case, the fund requirement for a manufacturing product innovation company would be larger than the technology innovation company. And if that is the case, and you also spoke about the foreign investors having a higher risk appetite, where even with the basic idea, they are able to perceive the idea and then say that, okay, this idea is going to click, therefore I'm going to invest. Now, my question to both of you is, how do you think the pitch deck, now it's a question of possibly behavioral psychology or whatever it is, or the investor psychology. How should the pitch deck be prepared in such a way so that you really create that kind of trust and confidence? What are the key drivers there for a product which is possibly not having a MVP, for a need which is still not fully validated, let us say, and solution is there, but it may not be the end solution, but it may have to be iterated further because the time duration will be longer. What should be the drivers which would excite the Indian investor to say that, look, I'm going to take the risk and bet on this particular idea, even without so many hard facts? What kind of a pitch it should be?
Yes, so if I may use one word, in this case, the founder or the founding team becomes the most critical on which someone will bet on. That is this team going to take this to conclusion? And therefore, the confidence in that team should be really high, that, okay, this team is going to take it to the next level. And then you generate interest among influencers who are not so much bothered about return, like Mr. Ratan Tata is there, Bill Gates is there. They funded so many projects, even just getting a mailer with the idea that I've got this idea. And so you get the attention of the right folks who are more interested in impact than return. And it's a tough task. And of course, the government is also ready to support long duration sustainable project with grants. So I know of folks developing diabetic drugs which don't need refrigeration. So they've got significant grants from government stage to state, but they are committed to the problem. As a founder, they are committed to the problem and ready to give their entire energy around the problem, and they are authentic. They are not faking it or showing you something which they don't want to build. So these are two things: be authentic and reach out to the right folks who can support you with patient capital or even grants.
So that means even before preparing the pitch deck, the one preparing the pitch deck should understand the audience of that pitch deck thoroughly.
He
right?
should be authentic. See, it's like I'm committed to solve this problem myself by giving my time, energy, and life to this problem. So the karma will get created of investors, well-wishers, mentors. It will get created.
Okay. Yeah, Sudhakar, would you like to add anything to that?
No. I think what he spoke about is exactly correct. Right investors, because see, whatever if it is from the heart, I think the first initial few seconds are going to be the deciding factors with the right set of audience for the investors typically. I think after that is all the entire slides might not be more interested. If the founders vision is accepted by the investor at the initial start, I think the entire concept of investing becomes much easier. So now you have to create that interest and excitement for the investors. And as Mr. Grish rightly spoke on, if someone is not from the construction industry or don't understand the construction industry, pitching that to the respective person is not going to create excitement for you to get.
Yeah. So with that, is it possible to say that any pitch deck, what we look at, there are a lot of samples. I think Girish was wise enough in asking me to show this slide, the last. I will show it now, which has got a lot of details, a lot of content in this pictorial, which Sharad shared it to me. Sharad Heda, he's also a mentor. He also mentors me. So this kind of a wait a minute, I need to anchor this. 1 second, just to hide it. Yeah. So this kind of a slide which says you have got here 500 startups, Guy Kawasaki, Sequoia Capital, Next Venture. What do they look for in a pitch deck? So many things are there. Starting from what is the problem, what is the solution value proposition, then business model, competition, funding, founding team, then fundraising. This is must have for all the cases. So here, if based on whatever you spoke, I think the most important thing is to have a clarity on the problem, not only the problem per se, but also the urgency of the problem to be solved. These two, I think, are extremely important before going to any other activity. And the third one possibly would be the founding team, to really see and explain to somebody that this founding team is the best available in the world to solve that problem. Then comes all the other things, in my opinion. Is that understanding right?
You're exactly exactly on the point. I think this is what the foundation is all about.
I would add validation to this also. I'm not seeing validation, although traction and other metrics are there. Validation in terms of customer testimonials, that early product market fit or net promoter score, which says that customers want what we've built.
Yeah, it's quite interesting, Girish, what you notice there.
Yeah.
Here it says market validation, why now? Okay. But that is not given such a high priority.
It's not given high priority. Yeah.
I think it basically goes by their risk-taking appetite.
Maybe.
You know, whatever you mentioned, both of you mentioned that, right? The foreign investors are more. All these are all foreign companies, right? Airbnb, pitch deck, crowdfounder,
True.
All are foreign. So I think what they're looking at is a problem, and what is the more than anything the problem first. Then comes the solution.
Maybe this is pre-funding winter. So after funding this winter, the validation has become as big a circle as problem and solution. Maybe this slide is pre-funding winter. Yeah.
Yeah, well, possible. But what was interesting to me is that the further details in terms of a MVP, whether it is working, not working, all that possibly is something which would happen over time. You know, especially in a product setup, not in the technology setup.
True.
So that's something which was very what should I say, exciting to me to understand that the importance of the problem is something which is very, very high. I think we should also in some way or other reinforce that in all our discussions. Whenever somebody is asking for any mentoring or for funding, the first thing is to really ask for what problem are you solving. You know, in fact, since the last setup, I have really occupied as to thinking as to what problem am I solving as a startup guy. I'm also a startup, so what problem am I solving? I created
a lovely framework actually on the problem, 10-point problem set with a CSD, criticality, severity, difficulty, and awareness. So there's a nice framework we've created.
Okay.
Using our strategy.
So next week or week after next, you can come back and explain that to us. Sure. Okay. So any other questions from anybody? LK only has a thumbs up. Other than that, anybody have any questions or comments?
For that framework, I gave the thumbs up and the thought of bringing him back again. Thank you.
Yeah, absolutely. So anyone else have any question? Okay. So if there are no questions, then
Dinakar,
yeah, please go.
You mentioned about ESG, not you. The speakers mentioned about ESG. Now, gentlemen, ESG as a concept has been around for now 4 years. Now, while the big fours are also talking about ESG, are there any big takers of ESG in the Indian context?
Correct. Now, most of the LPs which are investing in the Indian VCs are all global investors. Now, these LPs have a mandate in terms of abiding to the global ESG framework. Now, that is where going forward, most of the startups will be pushed towards showcasing their ESG parameter check and other things. So that is where ESG comes into play.
Sudhakar, what does LP mean?
LP is leveraged partners. Now all this VC or the P which are getting money from leveraged partners, which are basically large family offices or pension funds, right? So these are called LPs.
Okay. Okay, that means they are the ones who are basically putting their money
Putting their money into the private equity
into
or
the fund. Yes, Understood.
yes.
Understood. Of course, they're the most important. Of course.
Correct.
Now, I think our one of our participants was that Hamsavardhan had a question to Girish. You spoke about that 4 framework. Would it be possible for you to briefly explain what that framework is, Girish, in terms of the problem statement?
Yeah, so we encourage startups to look at the problem in terms of value points of problem points or value points, and we encourage them to list them down for the problem they are solving and then rate them on criticality. How critical is it? Like the vaccine example I gave, it's most critical. We needed the vaccine like yesterday, right? How severe it is. So how many people, the world was impacted by COVID. So everybody needed the vaccine. So that's the peak severity, right? Criticality, severity, and adaptability. How the criticality, severity, and difficulty. How difficult is it to solve the problem currently? So if it's easy to solve, there are good enough options available, then you're not solving a great problem, which is problem is already solved. You're not doing anything great. So ChatGPT is making so many things easier versus Googling and then finding after all the ads. So they made so many CSD problem easier for everyone. Without any ads, they were giving us the right solution, right? So that's why it's become so fast downloaded. And last is awareness. So if I'm not aware, like I would have developed this lovely test for detecting a heart attack early. But if folks are not aware that I have a clogged artery, then who's going to use my solution? So unless I do the regular health checkup. So that's the awareness bit, that how aware are folks that they have this problem. Many times high CSD problems have low awareness, and that times it becomes difficult to market. You need lots of marketing money to build awareness about the solution first and then sell your solution. So that's the framework we've created. We deploy it in our Minds program for early stage startups.
And this criticality has a lot to do with urgency, right? That's what you were mentioning. Is it correct?
Criticality is, yeah, I need the solution like yesterday. Criticality is that I have a headache. So we talk about painkillers versus vitamins. So is it a painkiller or is it a vitamin? Painkiller is I need it now, I have a pain now. Versus vitamin is I may or may not take it, I may forget it.
Yeah, I think the same thing was spoken by Sharad last week about the startup idea being vitamin, being a vaccine and not a vitamin.
Yeah.
A lot of vitamins, but no vaccines. Vaccine is more easily sellable. So thank you so much. Thank you very, very much. And then we look forward to again welcoming you once again on some other topic. And if the others have any topic which you want to speak next week, instead of me choosing a topic, please do share in the SIT group. Then I will take that as a topic.
No, I must compliment all of you. You've created a lovely group and there's so much action. To be frank, I'm not able to keep pace at times. So compliments on the SIT group. Yeah.
Thank you so much. Thank you. Thank you.